What if I told you that the energy sector, often overlooked for flashier tech, could be your portfolio's secret weapon for the next 5 years? Today, I'll break down 3 energy titans poised for long-term growth, a global leader with a rock-solid dividend, a household name with unmatched scale, and a pure-play pioneer in efficiency and shareholder returns. These companies are the backbone of the global economy, and understanding their value could transform your investing strategy. This isn't just about picking stocks, it's about seeing the real drivers of modern life. Stick around to discover why these 3 deserve a spot in your portfolio. Hit like, share your thoughts, and subscribe for more investing insights. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. First up is Chevron, ticker CVX, a name that's become synonymous with stability, reliability, and a commitment to rewarding shareholders through thick and thin. For decades, Chevron has stood as a pillar in the energy sector, weathering market cycles and global events with remarkable resilience. Chevron isn't just an oil driller, it's a fully integrated energy powerhouse, managing every stage of the process, from exploring new reserves deep underground, to extracting crude oil, refining it into usable fuels, and finally delivering it to consumers at thousands of gas stations worldwide. This vertical integration gives Chevron a unique edge, allowing it to capture value at every step and adapt quickly to changing market conditions. This integration acts as a natural hedge, providing steady cash flow, no matter how oil prices swing. When crude prices fall, Chevron's downstream operations, like refining and retail, often benefit from lower input costs, helping to offset any losses upstream. This balance is a key reason why Chevron has remained so resilient, even during oil market downturns. Chevron's dividend track record is legendary, over 36 years of consecutive increases, earning it the coveted title of Dividend Aristocrat. For income investors, this is a beacon of consistency and trustworthiness. Chevron's management has made it clear, rewarding shareholders is a top priority, and their ability to do so through recessions, oil crashes, and global uncertainty is a testament to their financial discipline. But Chevron isn't stuck in the past. The company is actively investing in the future of energy, pouring billions into lower carbon ventures like renewable natural gas, hydrogen production, and cutting-edge carbon capture technology. By leveraging its vast expertise and infrastructure, Chevron is positioning itself to lead the energy transition, not just follow it. These investments aren't just about compliance, they're about seizing new opportunities and ensuring Chevron remains relevant for decades to come. Recent acquisitions like PDC Energy and the proposed Hess deal are strategic moves that strengthen Chevron's position in some of the world's most prolific, low-cost oil regions, like the Permian Basin and Guyana. These deals aren't just about getting bigger, they're about securing long-term, high-margin production that will fuel Chevron's growth and cash flow for years to come. Chevron's disciplined asset management is another key to its success. The company regularly reviews its global portfolio, selling off weaker or non-core assets and doubling down on its most profitable ventures. This approach ensures that capital is always working as efficiently as possible, driving sustainable, profitable growth and keeping the company nimble in a rapidly changing industry. Their fortress balance sheet is the envy of the industry. With low debt and strong cash reserves, Chevron can invest in new projects, return capital to shareholders through dividends and buybacks, and weather even the harshest market storms. This financial strength gives Chevron the flexibility to act decisively when opportunities arise, and the confidence to maintain its dividend even in tough times. Behind the scenes, Chevron's world-class engineers and operators are the backbone of its success. These teams execute complex, large-scale projects with precision and safety, driving operational excellence and industry-leading profitability. Their expertise ensures that Chevron's assets run efficiently, reliably, and with minimal environmental impact. In short, Chevron offers investors a rare combination: diversification across the energy value chain, a rock-solid and growing dividend, and a pragmatic, forward-thinking approach to the future of energy. Whether oil prices are soaring or slumping, Chevron's business model is built to endure and adapt. Chevron stands with a market cap of $268.88 billion. The company posted an earnings per share of $6.93 and currently holds a price-to-earnings ratio of 22.24. For 2024, Chevron generated revenue of $202.79 billion, backed by a healthy net income of $17.75 billion. These figures reflect the company's ability to remain resilient and profitable, even in a fluctuating oil and gas market. For long-term investors, Chevron is more than just a stock. It's a buy-and-hold anchor for any portfolio. Its stability, reliability, and commitment to innovation make it a core holding for those seeking both income and growth over the long haul. The world's energy needs aren't going away anytime soon, and Chevron is perfectly positioned to deliver, today, tomorrow, and well into the future. As global demand evolves, Chevron's adaptability and scale ensure it remains a leader in meeting those needs. This isn't about chasing the latest trends or speculative plays, it's about owning a high-quality business built to last, with a proven track record of delivering value to shareholders year after year. Chevron is the gold standard for stability and shareholder returns in the energy sector, setting the benchmark for what a world-class energy company should be. That's why it's the foundation of our three-stock portfolio, a cornerstone investment that provides both peace of mind and long-term upside. Ready to discover the next giant in our lineup? Let's move on and see what's next for your portfolio. If Chevron is the king of American oil, then ExxonMobil is the emperor of energy, a company whose influence and reach extend far beyond the borders of the United States. ExxonMobil, ticker XOM, stands as a towering force in the global energy sector, shaping the industry's direction and setting the pace for innovation and growth. With operations on 6 continents, ExxonMobil's presence is truly global. From the frozen tundra of Alaska to the deserts of the Middle East, and from the deep waters off West Africa to the bustling refineries of Asia, their footprint is everywhere energy is needed. This unmatched scale gives ExxonMobil unique cost advantages and a level of global diversification that few, if any, can rival. Their ability to move resources, talent, and capital across borders allows them to adapt quickly to changing market conditions and seize opportunities wherever they arise. ExxonMobil's integrated business model is a marvel of modern industry. They control every step of the value chain, from exploring and extracting crude oil, to refining it into fuels and chemicals, to distributing products worldwide. This integration creates a resilient cash flow machine that can weather the ups and downs of commodity cycles. Their financial firepower is legendary. With billions in annual free cash flow, ExxonMobil can reinvest in high-return projects, weather even the harshest downturns, and consistently return capital to shareholders through dividends and buybacks. Over more than a century, ExxonMobil has survived every oil crash, every recession, and every geopolitical shock. In fact, they often emerge stronger, acquiring valuable assets from weaker competitors, and consolidating their leadership when others are forced to retreat. For years, critics claimed ExxonMobil was slow to embrace the energy transition. But today, they're at the forefront of developing carbon capture, hydrogen, and biofuels. Their low-carbon solutions business is not just a side project, it's a multi-billion-dollar bet on the future, with the potential to unlock trillions in value as the world shifts toward cleaner energy. The recent acquisition of Pioneer Natural Resources was a game-changer, making ExxonMobil the dominant player in the Permian Basin, the most prolific oil field in America. This move secures decades of low-cost, high-margin production, further strengthening their competitive edge. ExxonMobil's strategy is both simple and powerful. Use profits from traditional oil and gas to fund the next generation of low-carbon technologies. This self-reinforcing approach ensures that as the world transitions, ExxonMobil remains at the center of the energy universe. For investors, this means exposure to both the robust cash flows of today's energy market and the explosive growth potential of tomorrow's clean energy opportunities. It's a rare combination of stability and innovation. ExxonMobil's commitment to rewarding shareholders is unwavering. Their track record of paying and growing dividends even during tough times is a testament to their financial discipline and focus on capital efficiency. Stock buybacks further enhance shareholder value, making ExxonMobil a favorite among income-focused investors. But it's not just about scale and cash flow. ExxonMobil's technological edge is a key differentiator, from pioneering seismic imaging that finds oil others miss, to developing advanced chemicals that power modern life. Their relentless pursuit of innovation creates a durable competitive advantage. In a world where energy security is becoming more important than ever, ExxonMobil's vast infrastructure and global reach make it a strategic asset for countries and investors alike. Over the next 5 years, as geopolitical tensions and supply chain risks rise, this advantage will only grow in significance. When you invest in ExxonMobil, you're not just buying shares in an oil company. You're buying into a global powerhouse with a clear, forward-looking plan, one that's built to thrive in both today's world and tomorrow's. ExxonMobil is both a defensive stronghold, able to withstand market storms, and a long-term growth story, positioned to benefit from the world's evolving energy needs. Think of it as the battleship of your portfolio, massive, resilient, and built for the long haul. It's a company that can take hits, adapt, and keep moving forward no matter what the market throws its way. ExxonMobil has a massive market cap of nearly $500 billion. The company reported an EPS of $7.54 and holds a PE ratio of 14.85, more attractive from a valuation standpoint compared to Chevron. Exxon brought in a staggering $339.25 billion in revenue this year, along with a robust net income of $33.68 billion. What's especially notable here is the company's current share price of $111.98, which is approximately 15% below its fair value estimate of $128.86. This could present a compelling opportunity for value investors looking for upside potential in a blue-chip energy stock. For patient investors, ExxonMobil is essential for capturing the enduring value of energy. It's a core holding for those who understand that energy demand will persist and evolve for decades to come. While the market may obsess over short-term headlines and price swings, ExxonMobil's real value lies in its long-term strategy, operational excellence, and ability to adapt to whatever the future holds. This is a stock for those who want to own the future of energy, not just trade the news cycle, but participate in the transformation of a vital global industry. With its unmatched scale, relentless innovation, and commitment to both traditional and low-carbon energy, ExxonMobil's best days may still be ahead. The journey is far from over. Now let's meet our third pick, a pure-play specialist ready to carve out its own legacy in the energy world. Our final pick is ConocoPhillips, ticker COP, a pure-play exploration and production specialist that stands apart from the industry's integrated giants. ConocoPhillips is a company that's laser-focused on one thing: finding and producing oil and natural gas. This singular focus allows them to operate with a level of agility and efficiency that's hard to match in the energy sector, where many competitors are spread across refining, chemicals, and retail. Unlike the integrated giants, ConocoPhillips doesn't own refineries or gas stations. Instead, they pour all their resources into exploration and production, making them lean, nimble, and able to quickly adapt to changing market conditions. This streamlined approach means they can focus on operational excellence, cost control, and maximizing returns from every barrel they produce. Their strategy is simple but powerful: own high-quality, low-cost assets in some of the most stable and prolific oil regions in North America, like the Permian Basin, Eagle Ford, and Alaska. By concentrating on these areas, ConocoPhillips is able to generate robust free cash flow, even when oil prices are volatile. These regions are known for their rich reserves and relatively low extraction costs, giving the company a significant competitive edge. Beyond the U.S., ConocoPhillips also has a global footprint, with strategic assets in Canada, Australia, and other stable regions. This international presence helps diversify their revenue streams and provides additional growth opportunities, while still maintaining a disciplined approach to capital allocation. What really sets ConocoPhillips apart is their capital return framework. They're committed to returning a significant portion of their cash flow to shareholders through a combination of a stable base dividend, a variable dividend that flexes with cash flow, and aggressive share buybacks. This approach ensures that shareholders benefit directly from the company's success, especially when oil prices are strong. In fact, ConocoPhillips has pledged to return at least 30% of their cash from operations to shareholders every year. This is one of the most shareholder-friendly policies in the industry, creating a direct link between the company's performance and your returns as an investor. When the company does well, you see the results in your pocket, through dividends and share repurchases. Their disciplined investment approach is another key strength. ConocoPhillips operates with a clear long-term vision, guided by a 10-year plan that covers production growth, emissions reduction, and financial strategy. This kind of forward thinking is rare in an industry often focused on short-term gains, and it positions the company to thrive through multiple commodity cycles. One of the most exciting projects in their portfolio is the Willow project in Alaska. This massive development is expected to provide decades of production and cash flow, further strengthening ConocoPhillips's position as a leader in North American energy. The Willow project is not just a boost for the company, but also a significant contributor to U.S. energy security. The recent acquisition of Marathon Oil is another game-changer. By adding Marathon's high-quality, low-cost, high-margin assets to their portfolio, ConocoPhillips has deepened its inventory and enhanced its ability to generate free cash flow. This move is expected to drive even greater returns for shareholders and solidify their leadership in the U.S. shale industry. As a pure-play exploration and production company, ConocoPhillips offers investors more direct leverage to oil prices than the integrated majors. This means that when oil prices rise, ConocoPhillips stands to benefit more, offering higher upside potential. Of course, this also means higher risk during downturns, but for those bullish on energy, the rewards can be substantial. Fortunately, ConocoPhillips is well prepared for market swings. Their low cost of supply and strong balance sheet act as a safety net, allowing them to weather periods of price volatility better than many competitors. This financial strength gives them the flexibility to invest in growth, return cash to shareholders, and maintain stability even in challenging times. The company's management team is known for its focus on operational excellence and financial discipline. They consistently deliver on their promises, driving efficiency across their operations and maintaining a relentless focus on cost control. This commitment to best-in-class performance makes ConocoPhillips a top-tier operator in the industry. For investors, ConocoPhillips acts as the high-torque engine in your portfolio, offering both growth and direct exposure to commodity prices. This makes them an ideal complement to the stability and scale of Chevron and ExxonMobil, rounding out a well-balanced energy investment strategy. Over the past 5 years, ConocoPhillips has demonstrated its ability to grow production, maintain strict cost discipline, and return significant cash to shareholders. This combination is a proven recipe for outstanding long-term returns, especially for those willing to ride the ups and downs of the energy market. ConocoPhillips is the specialist in the oil sector, efficient, focused, and fully aligned with the interests of its shareholders. Their clear strategy and disciplined execution set them apart from the competition. When you combine ConocoPhillips with Chevron and ExxonMobil, you get a balanced, diversified energy portfolio that captures the best of all worlds: stability, scale, and efficiency. Each company brings something unique to the table: Chevron's stability, ExxonMobil's global scale, and ConocoPhillips' operational efficiency and direct commodity exposure. ConocoPhillips, trading under COP, rounds out this trio with a market cap of $123.32 billion. The company posted an impressive EPS of $7.94 and a PE ratio of just 12.20, making it the most attractively valued among the three by earnings metrics. For 2024, Conoco generated $54.74 billion in revenue and a solid net income of $9.24 billion. Its current share price sits at $96.85. A full 67% below its fair value estimate of $161.76, a significant discount that may catch the eye of bargain hunters. For investors who want to capture the full upside of a strong energy market, ConocoPhillips is the go-to choice. Their business model is built for those who believe in the long-term potential of oil and gas. Their transparent and generous return policy is a hallmark of a high-quality investment. You always know where you stand, and you can count on management to prioritize shareholder value. As ConocoPhillips succeeds, you succeed, directly and immediately. Their commitment to returning cash to shareholders is unwavering, making them a standout in the sector. That's why ConocoPhillips rounds out our top 3 oil stocks, offering a unique blend of growth, efficiency, and shareholder alignment that's hard to find anywhere else in the energy market. There you have it: Chevron, ExxonMobil, and ConocoPhillips, 3 energy giants, each with a unique edge for your 5-year portfolio. Together they offer stability, scale, and growth, covering every angle of the energy sector. This is about investing in the foundations of the global economy, not chasing fads. Want to learn how to spot value and build a winning portfolio? Check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and deep dives, join the Stocks Galore Patreon community. Which of these 3 fits your investing style? Chevron's dividends, Exxon's scale, or ConocoPhillips efficiency? Let me know in the comments. Like, subscribe, and I'll see you in the next video.